Hi, this is Clayton Ream with Van Honor Company with your grain and livestock closing comments for the afternoon of October the 23rd. Well, it was the end of the week here, and I think the grain markets really did a pretty good job for the bullish standpoint, I guess, of holding things together despite what's going on in the outside market. So I'll explain myself a little bit there. We got the dollar that had a lot of boost to the higher side, trading all the way to 97.50 here to close out the week, gaining about 4% in value. You know, other currencies tended to tail off a little bit, but that really brings into the whole equation of the export business and the demand moving forward. We have harvest that's reaching near completion on soybeans. The corn harvest is going to be slowed down a little bit, but I don't think enough moisture is really falling here to back anything up more than maybe a day or so. Probably helping improve conditions a little bit to get a little moisture on top of it. But it is the time of the year when we get those numbers and it turns from a supply equation to more of a demand equation. The end user starts to need to find some coverage. The farmer finds the ability to kind of close the bin doors, get things other things cleaned up and walk away from the markets for a little bit, so you lack that selling pressure as we move forward. So as long as the export business can continue to remain, fairly firm as we've seen, especially in the soybean market, despite what the dollar's been doing, I think maybe there'll be a little bit more upside movement here, and I think that's kind of the key equation right now. When you look at a week where the value of the dollar gains so much compared to the commodity prices, it leads into that equation maybe that there isn't quite as an effect, and that the tide is truly turning to that demand side that will help support the markets moving forward. As we work into next week, it's going to be the harvest crop progress, but we're going to mainly probably be watching those export inspections, which are the actual shipments at 10 o'clock Monday morning, first off, and then it's going to be the FOMC meeting, which will be kind of the key tail here. They'll release their minutes Wednesday afternoon, and I think a lot of people are going to be focused on what the Fed decides to do with the interest rates. So you do have China that's cutting interest rates back. You got the ECB that they really didn't make any decisions, saying they're going to create a little bit more stimulus package, and now you come to the U.S. where we're said to have a pretty steady economy. You got the Dow reaching all the way back near the highs here after a wild 3 months, and now you bring in that whole interest rate increase that brings into that further volatility of the outside markets that truly do affect our grain markets and meat markets. So those are the things going to be first items on the plate, and then also that November crop report is sneaking up on us in a quick fashion, just 2 to 3 weeks ahead of us. In the livestock markets, you had a cattle on feed report this afternoon. Nothing really too bullish or bearish out of the equation. Placements were slightly a little higher. Marketing is pretty much right in line. And then the cattle on feed number is pretty much right in line in expectation. So probably not a whole lot of uncertainty or I guess information there to create a massive market movement as we come in Monday. The cash markets, that's the number one thing we've been paying attention to, remain fairly slow as we've get this cattle on feed report. We do have bids at 136 on a live basis, which is on the upper end of last week's trade. Hog market though, you had the cold storage report yesterday show basically record beef and pork stocks in freezers right now. There is that demand equation with China and the exports potentially to continue to uptick to them as they've been in a kind of a liquidation phase. But really that cold storage report was kind of a bearish effect, and the cash markets are starting to show a little softness as well. So you had the December contract actually trade limit down at one point today, and the bear spreads coming out in true fashion. And when we get into these 2.3 million kilohead slaughter paces, it seems like these markets are a little bit more in line and brings into these normal equations of these bear spreads and seasonal patterns. So we potentially expect these deferred contracts to continue to gain on the nearby contracts if this cash market continues to have a little bit of softness as we work forward. As always, I guess I've already touched on the dollar. The Dow as well is a little bit higher. The energy markets have been pretty quiet this week. Big swings continuing. We expect these markets to probably remain in kind of a sideways, slight uptrend as we move forward. And I think in general, the number one thing people need to be paying attention to is we're basically in about a 1.5 to a 2-year bear cycle here with commodity prices. So pay attention to that El Nino and the production aspect of the worldwide markets. We've already seen it once in the ECB where the corn production was down this year. So it's going to be a big factor, especially for that soybean market as we move forward. So as always, trading in futures and options provides risk and loss and is not suitable for all producers. Have a great weekend.